Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Samsung jumps after Korea's biggest company says it will buy back more than $7 billion of stock. Chinese equities gain on fresh signs of policy support. Tension at the Treasury as candidates vie for the top economic job in Donald Trump's new administration. We will bring you the latest on that search. Plus, in a major change of policy, the US gives Ukraine the green light to use long-range missiles to strike limited targets inside Russia. Good morning, happy Monday. European futures pointing to very modest gains so far, pointing up by 0.1%. 4 straight weeks of losses for European stocks. What is the next catalyst for the European equity market? And are we starting to turn the corner on the downside pressure? US futures, meanwhile, looking to add as well. Up 0.3% after a week of losses for the S&P and the Nasdaq. The Nasdaq 100 dropped a little over 2% by the close on Friday. Stronger economic data, again, leading to concerns about how far this Federal Reserve can go in cutting interest rates. FTSE 100, by the way, pointing kind of right now up about 13 points. Bit of a lift coming through for commodities, so watch that in terms of oil and particularly iron ore in the session. Let's flip the board and look cross-asset then. I talked about that move up in yields. You saw the 10-year crossing 5% at one point on Friday before the dip buyers, 4.5% I should say, before the dip buyers came back in. And now you're back down to 443, having crossed that 450 level on Friday. Again, on stronger economic data. The Japanese yen in focus after the governor suggested a little bit of caution as to whether or not he will hike. They will hike in December at that meeting on December 19th. 154, then a little bit of softness in the yen, down 0.2%. Brent, $71 a barrel. And gold at 2,500, 0.8% with Goldman Sachs saying the yellow metal could hit $3,000 by the end of next year on central bank buying and rate cuts as well. Let's cross over right now to Singapore. Ava Hong standing by in Asia for a check on the Asian markets. Ava, what is standing out to you this morning?
Well, it's interesting how Chinese stocks, which earlier in the day clocked gains of as much as 1% plus, are erasing them now. And it really speaks to this bearish mood after sort of downgrades from the likes of Morgan Stanley and Goldman. So that is among the things that's standing out to me. But this is coming on a day where South Korea has really outperformed. And this is, as you alluded to, thanks to Samsung, $7 billion share buyback plan, which surprised investors. It's also, I wanted to highlight, coming on the day where the yen weakness is not helping the Nikkei at all. We are seeing the pharmaceutical stocks today tracking the declines in their US peers. The other bunch of stocks that we're keeping a close watch on today are the Asia chip makers, because they have been underperforming since the US election on concern of Trump's tariffs. And we're watching this week if they get a boost from Nvidia's earnings. Let's flip the board, take a closer look at dollar yen, because you know how the Japanese currency actually managed to gain ground last Friday once traders got wind that Governor Ueda would be speaking today, maybe signal something about the timing of the next hike. Instead, he chose today, speaking twice, to be cautious, not giving anything away in terms of the hike timing. And more recent comments in the past hour or so, he said that they would take the appropriate December decision based on the data. To some, this speaks and sounds like a BOJ governor that's just kicking the can down the road in terms of signaling when the next hike could be. And this sets the stage for a lot of volatility on dollar yen. Remember how for the Fed, the decision in December is still a coin toss. Flip the board, take a look at this chart as we rake through what we're seeing in China, those sort of more bearish outlooks from some of these brokerages. We initially saw the gain in Chinese stocks as traders weigh these regulator concerns and comments about how listed companies should kind of help to boost valuation. So that was a bit of a mood lifter initially. Others attributed the climb earlier in the session to these comments from the Chinese president, offering a bit of an olive branch to President-elect Trump. But also keep in mind what we're seeing, this chart courtesy of MLive's Mark Cranfield, that might explain what we saw earlier today a bit more. As we saw the sell-off last week, we also saw open interest climbing, suggesting dip buyers emerging. So perhaps unsurprising that we saw this climb today, especially given how Chinese stocks about 15% down from the peaks that we saw in October. Tom.
Okay. Ava Hong with a deep dive on the Asian markets, joining us out of Singapore. Thank you very much indeed. To the macro questions then around the Fed right now, because Boston Fed President Susan Collins says a rate cut could still happen next month, but emphasised that the final decision will be guided by incoming data.
I think we're well positioned. I certainly wouldn't take another ease in December off the table. But again, we're not on a preset path. And so we'll have to look carefully at the data and see what makes sense when we get to December 18th.
OK, let's bring in our markets reporter then, Bloomberg's Valerie Teitel, for the analysis. Valerie, where do we stand then? Is December still a toss-up for this Fed?
It very much is, Tom. We have yet to hear from a Fed official claiming that they are going for a pause in that December meeting. We heard from Fed Collins just there saying it'll be dependent on the data. But when we look at Fed pricing for December, we have now 16.5 basis points priced in for that rate meeting in December. And January is just 8 basis points. So the market really does think, Tom, that one of the next two meetings is going to be a pause from the Federal Reserve. Whether it's December or January might be all up to the data. And on that, guys, we did have U.S. retail sales on Friday that did come a bit stronger than expectations, especially when you looked at the revisions to prior months, Tom. It is a bit quiet on the data front this week. We have to wait until Friday where we get the global flash PMIs for the month of November. But let's take a look at how the 10-year yield traded on Friday's session, because it was a very interesting session in terms of price action. The 10-year yield hit 4.5 in Friday's late session, but then rallied very strongly off of that, really posing us some questions on whether those were some buyers emerging at that 4.5% level when it comes to that U.S. 10-year yield. But the equity market on Friday, it was plain sour, Tom. We had a big slide when it came to the tech-heavy NASDAQ and the S&P 500. Let's take a look at how the S&P 500 has fared since the election. If you flip on the board, we've erased now half of those gains since the election trade. We're now fallen nearly 3% since all-time highs when it comes to that S&P 500 future. We do have Nvidia reporting on, Tom. That can be the next maybe a guide forward for the equity market. But perhaps some of this jitterness in the equity market, Tom, really coming from the fact that we've yet to hear a Treasury secretary or a trade secretary come from the Trump administration. And those are going to be key for the market's reaction, because we're eyeing just how strong those tariffs will be when Trump takes the presidency on January 20th.
Valerie Teitel setting us up perfectly for the next segment then. Valerie Teitel checking the markets, of course, nodding to what's happening in terms of the focus on who is going to be the next Secretary of State for the Treasury in the US in that incoming Trump administration, of course, because the fight over Donald Trump's chief economic policymaker is heating up, as Val suggested, as business leaders, billionaires and Wall Street executives push the president-elect to choose their preferred candidates to lead the Department of the Treasury. Let's bring in Bloomberg's opening trade anchor, Kriti Gupta. Kriti, where do we stand then? Are we any closer to knowing who is going to be the next Treasury Secretary for the U.S.?
Well, Tom, it feels like we just got out of a neck-and-neck race, and here we have yet another one when it comes to Treasury Secretary. No, we're not anywhere closer, simply because there seems to be a little bit of a pushback from the insiders who know President-elect Trump super well. Of course, it did feel like Scott Bessent was going to be the no-brainer choice, and now it feels like that has been unseated by Howard Lutnick, coming back to the same issue that Valerie just pointed out, the question of tariffs and how tough you can go. Of course, it's not the only players in the kind of race to be the next Treasury Secretary. It's Robert E. Lighthizer, former U.S. Trade Representative, Bill Hagerty, a senator out of Tennessee, and even Mark Rowan, the CEO of Apollo and frequent guest of this show. But I think it's important to keep in mind what the Treasury Secretary actually does. $28 trillion of a Treasury's market is going to be a key one. The economic sanctions, of course, in terms of Russia, in terms of potentially China, even other players in the Middle East. Tax policy, the IRS is trying to really decrease taxes funded by the tariff story. They're also fifth in line to the succession story in the U.S. presidency. Of course, I don't think we've ever gotten to fifth in line, but I think it's helpful to know who has that spot. It's a lot going on in terms of Treasury pick. At the end of the day, Elon Musk is a big player in all of this. He's very specifically tweeting out and says that his view is that Bessent is a business-as-usual choice, whereas Howard Lutnick will actually enact change. It feels like that him throwing his weight behind Howard Lutnick seems to be moving things behind the curtains.
Yeah, he wasn't able to move it for the Senate leader, was he, Musk? But maybe he can move it when it comes to Treasury Secretary. I didn't know about the fifth in line in terms of the succession. That is interesting. Maybe for a pub quiz. When it comes to the Energy Secretary, okay, it's a big question mark over who's going to be the Treasury Secretary. But we do have some clarity in terms of the nomination, at least the nominee for the Energy Secretary for the Trump administration.
We do. His name is Christopher Wright. He's the Liberty Energy founder and CEO. And again, I think it's important to keep everyone's eye on why this is so important, because some of the criticisms against this pick is that he's not qualified to do this job, even though he's operating in the energy sector in the United States, because the Energy Secretary is not only in charge of domestic policies around energy, electricity production, they're also in charge, again, of sanctions when it comes to some of the energy there, maintaining Americans' nuclear warheads. That's a pretty big responsibility, LNG projects, and of course, the SPR, the Strategic Petroleum Reserve. But if you look at all of that, that's where the criticism comes, that maybe this is not the correct kind of fit for this, especially at a time when LNG exports are increasing to Europe. And that is going to be a key piece of his agenda, increasing that domestic production. It's also been a key piece of the campaign trail for President Trump. We actually had him on 2 years ago on Bloomberg Television. Take a listen to what he had to say.
I'm not here to protect market share for oil and gas. Not at all. I'm just here to be honest. But we should do credible things, and mostly driven by market forces. But shoveling subsidies to wind and solar, who are 3% of global energy, that's not meaningfully going to change greenhouse gas emissions. But it is going to drive electricity prices up.
So subsidies to things like renewables, wind and solar, he's not very much a fan of. Something in line, by the way, with President-elect Trump, who, by the way, has kind of turned his tune on solar. But again, when we're talking about this wind story and the underperformance specifically in Europe for some of the wind players here, like Ørsted, for example, that has that major exposure, this may not be the most bullish pick for folks like that.
Yeah, and of course, the oil industry unofficially and by other means has received subsidies as well, historically. OK, Kriti Gupta, thank you very much indeed with the analysis in terms of where you stand. In terms of some of these picks, the Energy Secretary then, at least the nominee, the candidate coming through, but still question marks over who's going to be the next Treasury Secretary. Now, the US has lifted restrictions, meanwhile, on Ukraine's use of some long-range Western-made weapons to strike military targets inside Russia. President Putin's forces launched a 120-missile barrage at Ukraine just over the weekend, striking energy infrastructure. Bloomberg's Bill Ferries joins us for the details. Bill, is the lifting of these restrictions coming too late then? Ukraine has pushed for this for months. Finally, it seems they've gotten it over the line.
Yeah, that's the question people are going to be asking repeatedly, I think, in the weeks to come as Ukraine starts to put this system to use, or we expect it to put it to use, attacking targets further inside Russia, perhaps trying to protect that Kursk region that Ukrainian troops took from Russia earlier this year. But again, it's one of these examples of Ukraine having pushed for use of a weapon system, the U.S. and the West pushing back on that for months and months, and then finally relenting. What this could do for Ukraine is help it secure that Kursk region, deal more damage to Russia ahead of what could be truce talks at some point in the coming year. Ukraine would like to have whatever leverage it can over Russia. If truce talks are brought forward, they would potentially want to trade their territory they hold in Russia for territory that Russia holds within Ukraine's boundaries. So we'll see when they can put this to use, how quickly. But it could be something that affects this conflict on the margins for sure.
Yeah, at a time when our own reporting and others is suggesting that the allies of Ukraine are pushing for them to think more comprehensively about a potential ending to this war. Where does that conversation, where does that pressure lie at this point, Bill?
Well, certainly, Donald Trump is sworn in as the 47th president 9 weeks from today. So that is a deadline that Ukraine and all its allies have very high in their minds. We know that German Chancellor Olaf Scholz spoke with Russia's Vladimir Putin over the weekend. That was the first high-level communication between the two and between U.S. allies in almost 2 years. We know that in South America right now, Turkish President Erdogan is expected to put forward some kind of a truce proposal that we believe would largely leave Russian forces, with the territory they currently hold, it might shift it to a demilitarized zone, but it would take some of that territory away from Ukraine. There is just mounting pressure on Ukraine to bring about some kind of a conclusion to this conflict. And it's not clear really whether Vladimir Putin will go along with that. But with Donald Trump taking office in 9 weeks, there's a sense that the game is changing very quickly.
Bill Ferries, thank you very much indeed for the latest. Coming up, talking of geopolitics, China's Xi Jinping tells President Biden he is ready to work with Donald Trump to improve the relationship between the world's biggest economies, but a warning as well over decoupling and his red lines. We get the latest next. Stay with us. This is Bloomberg. Welcome back. Now, world leaders are gathering in Rio de Janeiro this week for the G20 summit. They are expected to show unity on climate action and global trade rules, two areas threatened by US President-elect Donald Trump. Bloomberg's David Gura has more from Rio.
On the formal agenda for this G20 Leaders Summit are debates about climate change and sustainability, global trade and development financing. But there will also be some hard conversations about conflicts around the world, including those in the Middle East and Ukraine. Russia's President Vladimir Putin declined to come to this week's summit, and Vladimir Zelenskiy, the president of Ukraine, wasn't invited to attend. This summit comes at a time when the winds are starting to change when it comes to geopolitics and the global economy. And the G20 Leaders Summit comes on the heels of another gathering of world leaders in Lima, Peru, the APEC Summit. While he was there, President Biden sat down with his Chinese counterpart Xi Jinping for a one-on-one meeting.
We haven't always agreed, but our conversations have always been candid and always been frank. We have never kidded one another. We've been level with one another. And I think that's vital.
Those two leaders last spoke in April by phone, and President Biden used this opportunity to stress how much the relationship has improved since he's been in office. There's now open communication between Washington and Beijing after 4 frosty years when Donald Trump was in the White House. Of course, Trump is heading back into power in the United States, and the uncertainty about what that means loomed large over that summit in Peru, just as it looms large over this one here in Rio de Janeiro. President Xi stressed that it's in both nations' interest for there to be a good relationship between the U.S. and China, but he said China would not be afraid to fight back if the U.S. crossed red lines. In Rio de Janeiro, David Gura, Bloomberg News.
And Chinese leader Xi Jinping has told President Biden he is ready to work with Donald Trump to improve the relationship between the world's biggest economies. But Xi also used the meeting to lay out a warning on China's red lines. Bloomberg's Katya Dmitrieva joins us now for the details. Katya, thanks for joining us. So what are those red lines that Xi Jinping outlined for President Biden and the team? What does it tell us about how this relationship between the US and China is likely to evolve going forward?
Well, the 4 red lines, as you mentioned, were laid out at this meeting over the weekend between Biden and Xi at APEC. And we haven't necessarily heard anything new. I mean, these are things we've heard between the two countries before. But this time, it acts more as a kind of a warning for incoming President Donald Trump than anything else. And those 4 red lines include: do not undermine China's economy, do not interfere with the party, do not interfere when it comes to bringing or trying to bring democracy, and fourth and finally, and perhaps the most contentious, is stay away from the Taiwan issue. And I can tell you, I was actually at an event last week here in Hong Kong, and the ambassadors for both China and the U.S. spoke, and it was the exact same message. And you can tell just from those 4 red lines and from the U.S. actions in the previous 4 years and support for Taiwan and that issue that these are just going to continue being very tense, especially when you have an incoming president who's announced 60% tariffs on China as well as flat tariffs on the rest of the world. So, of course, Trump is not going to be at the G20. However, the news reports are going to be coming out. And this is something that a lot of markets and economists will obviously be looking for. And in fact, they'll be looking at the G20, but they might also be focused on Twitter and on Truth Social.
Well, yeah, indeed. He won't be there, but he's going to loom large, isn't he, as you suggest. So, on the G20 then, Katya, just a little bit more detail in terms of how the markets and how economists are thinking about what could come out of that G20, or at least where the focus will be during those meetings.
Well, the key issues, of course, China, U.S., geopolitics. Although Trump won't be there, there's going to be a lot of other world leaders. They're going to want to have a lot of meetings. This is kind of a perfect chance for them to reassess things, perhaps talk about trade deals going forward and the flow of trade going forward, because these tariffs could really upend trade once again, as we saw in 2018, 2019. They're also going to want to talk about Ukraine and Russia, as we just heard from Bill. They're going to want to, tensions are flaring up again. We had 200 rockets fired over the weekend into Ukraine. It's been 1,000 days of this, and leaders are kind of already lining up, even ahead of Trump, to try to find some way to, concede or recognize that Ukraine must potentially make some concessions here. So geopolitics is really looming large. And it's been really chaotic for economists and analysts to try to predict what's next in these crucial kind of 2 months or 9 weeks ahead of the inauguration. And what that's meant in my discussions with everyone has been really a lot more modeling, a lot more watching of social media, and a lot more kind of scenario analysis. So if there's 60% tariffs, what does that mean? If there's 20% tariffs, what does that mean? And overall, so far, I could tell you it's, negative for global growth. Tariffs would be negative for global growth. And as for Trump's policies on taxes versus tariffs, the gain in the U.S. economy will be really canceled out by those levies. So, this whole idea of the economy and geopolitics, you can expect to see a lot more from that at the G20 than even from APEC.
OK, gaming out these various different scenarios with still a lack of clarity exactly as to how some of these policies will land. Katya Dimitrieva, thank you very much indeed for the context on the back of APEC and as we look ahead to G20. Coming up later on in the show, we're going to head over to Germany, where the Greens have picked Economy Minister Robert Habeck to lead them in the snap election that, of course, takes place early next year. More on that shortly. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to some other stories making the news this Monday. A stabbing attack left 8 people dead in the Chinese province of Jiangsu on Saturday. It is the country's second mass killing in just a week. The incident happened at the Wuxi Vocational Institute of Arts and Technology. A 21-year-old man has confessed to the crime, with officials saying he was discontented with the school over a graduation matter and internship pay. Hezbollah has confirmed that its media chief, Mohammed Afif, was killed in an Israeli airstrike on central Beirut. It marks the latest in a string of targeted killings of top Hezbollah leaders, which included Secretary General Hassan Nasrallah in September. Lebanon's Ministry of Health also said a second separate strike killed 2 people and injured 13 others. Tech-focused platform The Information is reporting Nvidia has asked suppliers to change the design of the server racks for its new Blackwell graphics processing unit due to overheating. The report cites company employees, customers and suppliers. A spokesperson for Nvidia declined to comment on whether the company has finalised the Blackwell rack designs. And Samsung has surged after the company announced a plan to buy back $7.2 billion of its stock over the next year. Today's share price jump comes after a decline over the year amid concerns around the electronic giant's memory chip business falling behind in the AI market. Coming up, why France is scrambling to block a key EU trade deal with Latin America as the EU braces for a second Trump term. We bring you the details on that story, the implications for Europe's future trade with that part of the world, Latin America, whether or not France can actually block it. Stay with us. This is Bloomberg. Good morning, morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Samsung jumps after Korea's biggest company says it will buy back more than $7 billion of stock. In China, fresh signs of policy support fail to boost equities. Tensions over Trump's Treasury pick. Infighting slows the decision on who will get the top economic job in the new administration. Plus, in a major change of policy, the US gives Ukraine the green light to use long-range missiles to strike limited targets inside Russia. The markets right now looking for a move higher. Modest gains coming through in terms of European futures, up 0.1% after 4 straight weeks of losses for European stocks. So pushing higher, but not with much conviction at this point. FTSE 100 futures looking to add 12 points. Commodities getting a bit of a lift, particularly iron ore. That could help the miners listed here in the UK. S&P futures looking to add 0.3% after a week of losses for US stocks. Last week, the S&P has lost about half the post-election gains that we've seen come through for that major index. Nasdaq 100 futures, that index fell more than 2% by the close on Friday, currently looking to gains of 0.7%. Let's flip the board and have a look cross-asset, because part of the story around the sell-off in equities on Friday stateside was down to high yields, particularly the 10-year reaching 450. For the first time in a while, yields hit 450. Then you had a bit of dip buying. You're now at 442. Currently yields down 1 basis point in the session. 154 in Japanese yen. Little bit of weakness coming through. Comments from Ueda suggesting that he remains at least data dependent leading up to that next December decision, putting a question mark over whether or not they do indeed hike at the December 19th meeting. $71 a barrel on Brent, just up 0.1%. Gold at 2,500, up 0.9%. Goldman Sachs saying buy and go for gold, with expectations that you're going to hit $3,000 by the end of 2025. Let's get to the politics of Germany right now, because Germany's Greens have picked Economy Minister Robert Habeck to lead them into February's elections. This as support for Chancellor Olaf Scholz from his party weakens further. Bloomberg understands some members of the SPD would prefer Defence Minister Boris Pistorius to lead the campaign. Let's bring in Bloomberg's Oliver Crook, standing by for us, of course, with the details. Ollie, how much support does Scholz then have at this point?
Yeah, well, listen, Tom, I think that it's a question that is evolving pretty quickly. I mean, this is the situation if you're the SPD and you're thinking about your sort of prospects going into this election. You have, on the one hand, an incumbent chancellor candidate who obviously has a lot of prominence, who has been leading the government. That may, in this case, be a huge disadvantage because he is a very unpopular candidate and is an unpopular coalition government that just collapsed. On the other hand, you have also one of the most popular politicians in all of Germany, not just in the SPD, in the form of Boris Pistorius, who has been defense minister. But for the time being, the support has been behind Olaf Scholz at the SPD level. But if you look on your screen there, you see it right there. Poll across the sort of the country within Germany, Boris Pistorius is favored by 66% versus Olaf Scholz. Only 18% of people think that he should be the candidate going forward. This will all come to a head on January 11th when they will formally elect choose who they will put up as the candidate. But going into this, you have to think about how potentially this thing played out in the United States, right, where you had an incumbent candidate for the Democrats in the form of Biden, who held on arguably for too long and then put in Kamala Harris at the last minute. That did not go particularly well. So there are going to be some kind of conversations about this going forward. And I would say there is a non-zero chance that Olaf Scholz is not the candidate going into this election.
A non-zero chance. Ripple effects, maybe at least some mirror imaging of US politics over in Germany. So maybe the clock is ticking on Olaf Scholz. Meanwhile, was this a curveball? This seemed to come out of nowhere, but maybe this was already being kind of planned and it was a long time in the works. But Olaf Scholz picking up the phone and putting a call through to Putin. What was behind that?
Yeah, so listen, Tom, I mean, we broke the story on Friday here at Bloomberg, and really it did come a little bit out of the blue, I think, to many people. I think judging from the reaction that we got from a lot of other leaders across the world, it didn't take everybody by complete surprise. Obviously, we heard from Zelenskiy saying that this call basically opens Pandora's box. But this is really, I mean, the real question is this. Is Olaf Scholz, who has really shied away from being a sort of main character on the global stage, really being a protagonist, where has this guy been for the last 2.5 years, who's picked up the phone, talks to Vladimir Putin for an hour, and says that he's going to remain in contact. Obviously, there is the context of the election going on. Olaf Scholz has been trying to cast himself as a sort of non-escalatory figure versus Friedrich Merz, who has, for example, been saying that we should be sending long-range weapons from Germany to Ukraine so that they can use them freely. But there sort of speaks to the sort of contradiction that exists currently in trying to appraise how to deal with Russia with a Trump presidency on the horizon. On the one hand, the Europeans have consistently said there will be no decisions made about Ukraine without Ukraine, yet on the other, it may be forced out of their hands, and they're now facing the reality that if potentially they don't re-engage with Putin, they may be not at all in the conversation when Trump comes into office, and I think that that is the line that now Olaf Scholz has been trying to walk, though it's not clear exactly why he's the right person to have that conversation.
Okay, really fascinating. Maybe European leaders wanting to be at the table if those talks come about. Oliver Crook, thank you very much indeed in terms of some of the political ramifications of all of this rippling through Germany, of course. And talking, of course, of what's happening in terms of European leaders, the impact of a second Trump presidency on world trade will lead agendas at both APAC in Peru and the G20 meeting in Rio de Janeiro. Meanwhile, France is hoping to persuade Poland into joining forces to block a trade deal between the European Union and Latin America's Mercosur bloc. OK, so the French position there, at least from one minister. Let's get more from Antonio Barroso from Bloomberg Economics. Antonio, set the context for us. Why is this deal important for the EU? Am I right in thinking this has been 25 years in the making?
Indeed, Tom, it's been a very long negotiation. And in fact, when you look at the numbers, we have crunched the numbers, the modeling, and we showed that the EU doesn't stand to benefit hugely from this deal. But the deal has a very strong geopolitical importance for two reasons. As you know, the European Union is a very open economy, especially some of the countries of the European Union, such as Germany. And right now, the EU is facing tensions on one front, on the Chinese front, as you know, because of the imposition of tariffs on electric vehicles coming from China, and is soon to face tensions on another front, the transatlantic front, due to the election of Donald Trump. So I think cutting this deal is very important for the EU to show that it can still pursue free trade and free trade deals around the world. The second issue is that China is increasing its footprint in the region, in Latin America, and the European Union is pursuing a policy of de-risking its supply chains from China. And Latin America is a region that is rich in critical minerals, something that the EU needs. So cutting this deal is very important for the EU for those two reasons, to make sure that it can pursue free trade and to have access to a key region in terms of critical minerals.
So given all of that, Antonio, why is France seemingly intent on trying to block this deal?
Well, I have one word for you, and that is farmers. Actually, when you look at opinion polls in France, half of French people don't know what the deal is. It's like foreign policy. Normally, people in their daily lives don't care about these type of issues. However, farmers do, and they are a very powerful constituency. They are able to mobilize very quickly and very strongly. They're able to put the tractors on the roads and to block roads and to be really a headache for the government. So that is the primary reason. Farmers will tell you that actually, despite the fact that some sectors of farming stand to benefit a little bit from the deal, there are specific sectors that will be badly hurt, such as beef. The deal will allow higher imports of high-quality beef, which will particularly hit French farmers. I think the government is hearing these concerns. They're really worried that, again, we're going to have a wave of protests like the one that happened at the beginning of this year. And hence, that's why the government is pushing back against the deal and trying to build a coalition in order to block the deal.
OK, excellent context from Antonio Barroso from our Bloomberg Economics team on the implications of this trade deal and the opposition to it, and coming through from France. Speaking of which, we heard from the French EU minister, by the way, Mr. Haddad, talking about the French case for why they are taking an opposite line, or at least opposing this deal. So that's who we heard from just before we crossed over to Antonio for the context. Now to Spain and the banking sector, because Spain's Santander has been bolstering its investment bank with a hiring spree that includes dozens of former Credit Suisse staff. The new recruits and their flurry of transactions are starting to reshape the retail lending giant. Bloomberg's Rodrigo Orihuela joins us for more. Rodrigo, how big is this expansion then of the investment bank at Santander? How consequential is this for the sector?
It's big by many standards. It's more than 200 bankers over the last couple of years. The number of staff that the investment bank has in the US went up from 900 to 1,300 over the last 18 months. The number of risk takers who earn more than €1 million has also more than doubled over the last 3 years. So the numbers show that there's a lot going on. They're still reporting a pre-tax loss in that unit, largely because of the costs. But the bigger question and the bigger answer to that is it's very big because there's a big aspiration to be a heavyweight within what they call the second tier of investment banks. So they're not going to go and try to, as Anna Botín says, steal many clients from JP Morgan, but they're going to try to steal a few. They want to have a presence and they want to be a recognized name within Wall Street investment banking.
Well, Rodrigo, to your understanding, how realistic is that aspiration for Santander? And is this investment and this push paying off?
Well, they are starting to get into business lines where they were not present. Their main aspiration is that they will be able to serve, or what they say is their main aspiration, is that they will be able to serve American clients in the same way they are able to serve their big corporate clients in Brazil and Europe mainly. And so they want to be able to do that because they say that is something they were lacking. So in that sense, it seems like it's something doable. What we are seeing as well, as our piece today shows, is that they're also getting into sectors where they never really had a presence, namely leverage finance. They had 21 deals in the US last year in this segment, and this year they've already done 110. So clearly there is a lot of space to grow, and they're also aiming at areas where they already have expertise abroad. Energy transition, infrastructure are two sectors. Energy in general is where they think they can make a difference. So there is an element of realism, but obviously there is a long track record of European banks not doing too well when they want to get into American investment banking. So there's a touch of, I wouldn't say skepticism, but caution.
Yeah, it's going to be fascinating to watch in terms of how this plays out for Santander, given those renewed ambitions. Bloomberg's Rodrigo Orihuela with the details there. Well worth reading, of course, on the Bloomberg terminal and on Bloomberg.com. Now, some other stories making the news this Monday. Asking prices for UK houses fell more than usual in November. That's after the government's budget disappointed prospective buyers and affordability remains stretched. According to property website Rightmove, the average price of a home put up for sale fell 1.4%. That's almost double the November average. And funds backed by the governments of France and Germany have invested in a 3-year-old startup that's leading European efforts to build an alternative for Elon Musk's Dragon space capsule. The exploration company says it's completed its largest funding round, raising $160 million from investors. It's looking to further develop a modular and reusable space capsule. Coming up, Treasuries see a 2-month slump as traders prepare for the return of Donald Trump to the White House. We're going to get the market analysis and expert insights. That's coming up in the next couple of minutes. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the US Treasury market has seen a 2-month slump, wiping out most of its gains for the year. That's as traders, of course, prepare for Donald Trump's return and potential slower rate cuts from the Federal Reserve. For more, let's bring in Tatjana Greil Castro, co-global head of public markets at Muzinich & Co. to think about how these bond markets may shape up and where to find maybe some value within credit as well. Tatjana, great to have you joining us bright and early this Monday morning. I want to start with kind of the here and now. We saw the 10-year reaching 450 on Friday, stronger economic data out of the US, and then seemingly some dip buyers coming in. What does that move? What do the moves on Friday signal to you about the trajectory for these markets and how far this bond sell-off can go?
Yeah, good morning, Tom. Bright and early indeed. But so 450, I think, is for a large part of the market is sort of a level where we find support. So that is definitely something to consider, especially as a lot of the trading now is taking place by algo traders, as I think we've talked about in the past. So they move markets definitely. Having said that, when you just look at fundamentals, then there is a concern that 450 may not be the upper range that we are testing. So we are definitely concerned that we see a further bear steepening of the curve, with actually the short end being less supported also, but still being supported. We do expect there to be some further rate cuts. But then when you go further out with the uncertainty of what the trade policies are bringing, that we see definitely there to be room for more volatility. And that is, for the first round effects in terms of tariffs and in terms of the changes of immigration statuses and what influence, how that affects inflation. But then also the second round effect, how that impact on growth may then, sort of further down affect the Treasury market. So we definitely expect there to be more volatility. And then from there, what level do we need to center around in order to get paid for that volatility?
Yeah, the continued uncertainty over the shape, the scale of these policies that the incoming Trump administration will be enacting. You do still see further cuts from the Federal Reserve, Tatjana, as you were saying. What does that mean? Do they go in December? Markets, I think, are pricing in just 2 rate cuts from the Fed between now and June, I believe, of next year. Does that align with your view? How do you see this moving forward then in terms of the cycle of cuts from this Fed?
So, rightly so, the Fed and all central banks have really stepped away from giving forward guidance, and that makes a lot of sense because you want to be prepared for what's in front of you. So, I think the Fed is very much assessing what the policies are expected, how they are expected to shape. I think we can already see by the appointments that it's sort of full steam ahead with regards to the new policies coming into place. So based on that, I would say that the Fed will be very carefully treading, and with those 2 rate cuts priced in currently by the market, that's probably a sensible thing because, we'll need to see how the appointments are shaping up. But we'll definitely see that there is full confidence by the new administration and that they have big plans. So just based on that, I think it is right. It's well priced to say no more than 2 cuts for the next 7-8 months.
Okay, possibly no more than 2 cuts over the next 7 to 8 months for the Fed. So we're looking potentially then, Tatjana, at a divergent policy response from the ECB on one side and the Fed on the other, potentially a more dovish ECB. That's the market expectation. What does that mean for corporate credit in Europe? Are you finding value there? And if so, where within that corporate credit basket?
So when we look at how credit has performed in Europe and in the US, both have performed well. And European spreads have caught up with US spreads. But more recently, actually, they have diverged a little bit again. So we continue to see value. And when you look at the constituencies, especially on the investment grade side, it is a well-diversified asset class. The European sectors are actually more diversified than the US corporate sector. So in that regard, you can find good value. And you can diversify both geographically, but also in terms of sectors. So we do think it's an important part of a global portfolio to have European credit in there, and you get paid for the additional risk. Similar to what we've just talked about with regards to interest rate duration, we would suggest not to take too much credit spread duration. And that is for 2 reasons. One is oftentimes people talk about credit spreads being very tight. When you actually do a detailed analysis, the tightness comes in the long end, and that comes from yield bias. And so we would suggest to be actually better placed to be in the belly or in the short end of the curve, where you get much more generous spreads, especially in Europe, than in the long end, and you are more insulated against potential moves against you.
Okay, Tatjana Greil Castro, Co-Global Head of Public Markets at Muzinich & Co. on the opportunities near the front end, maybe the belly of the curve as well when it comes to investment-grade credit in Europe, and a view that maybe 4.5% is not the upper range for yields in the US. Tatjana, thank you as ever for the analysis. There's plenty more coming up. Stay with us. This is Bloomberg.
I think we're going to be looking at rates coming down over the next year along the lines of what the dot plot said. So I still think we have a long way to go down with rates. There's some dispute about what is the neutral rate at which we're going to settle down. If there's disagreement about that we don't just charge right to it, that we slow the pace as we get toward it.
Okay, Chicago Fed President Austin Goolsbee on his views around where the neutral rate is, expectations that there will be further cuts, but how far and how fast, of course, remains a key question for these markets. And, of course, where the Fed goes impacts what's happening in terms of Japan, the Japanese yen, the BOJ. And we're hearing some cautionary comments from Governor Ueda around whether or not December is in play. That decision coming through December the 19th. Markets had expected maybe slightly more hawkish comments. We didn't really get those. Data dependency, a little bit of softness then in the Japanese yen. Here's what's happened in terms of where it has moved through the moving average of 151. You're in at 154. Interestingly, of course, this is down to rate differentials. Of course, a big play. 0.25% is the rate in Japan versus 4.75% over in the US. The rate differential is, of course, at those elevated levels. Mizuho, interestingly, they have a forecast that the yen actually gets to 130, so strengthens through next year as those rate differentials start to ease. Others have different views, 130, 140, but there is a view there that you do get a little bit of strengthening. But the story in the last few days has been the softness, of course, in the Japanese yen as expectations have started being faded out in terms of how fast the Fed will go. Let's flip the board and have a look at Nvidia. That's the big, of course, earnings story of the week. The details crossing stateside on Wednesday. And this detail coming through, the analysis from Dan Curtis, I should say, from our team who crunches the numbers for us, showing that actually there's a bit of a disconnect when it comes to Nvidia earnings and how the S&P performs if you look back historically. So, for example, downside came through August 2024, August of this year. It dropped 6.4%. The S&P was actually flat. So you can see this divergence going through. So the numbers that come through from Nvidia, the way that that stock performs, not necessarily indicative of where the S&P 500 lands as well. We also have that detail and the analysis coming up through the next show as well. The opening trade is up next with a host of great guests. Stay with us. This is Bloomberg.